Today's number is 1 million because what Tom Lee just said about Bitcoin is going to shock you. Could it be the end of the bull market or just the beginning? Well, one thing's for sure, Wall Street has been busy squeezing several stocks over the last 24 hours, and it's causing all-time highs in the Russell 2000 and a new high on the S&P 500. What tends to happen next? Well, in today's video, we'll break it all down together, including some of the biggest option gamma squeezes we've seen in some time. Stocks, commodities, and cryptos, let's cover them all right now. See you soon. Well, welcome back everyone to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be taking a look at everything that you need to know, from the macro to the data to the key flows from Wall Street. What just happened when it comes to the capitulation market, and are we going to push higher? Well, we've got all of that coming up in today's show, including what just happened with Intel, Crowd, and many other stocks. A lot of big moves. Let's get into it straight away. Now, maybe the biggest shock of the last 24 hours was probably the big calls being made by Tom Lee. Now, he's always the optimist, as you guys know, and I'd be interested to see what your opinion is on this, but he's calling for, of course, 200,000 for Bitcoin by the end of the year. Now, that's foreseeable. It is possible. Of course, we've long talked about 150 to 165K throughout the entirety of 2025. But then he said that he thinks that Bitcoin is going to match, if not surpass, gold. Long-term targets, $1 million. On top of that, maybe up to $3 million because he believes Bitcoin is bigger than gold long-term. Do you agree with those statements? Let us know in the comments down below. But I also thought his optimism on Ethereum was pretty high, 60K in 5 years potential, and of course 50% chance that Ethereum flips Bitcoin. Wow, imagine if that actually did happen. We'll talk more about our thoughts on crypto later on, including some of the latest intraday stuff. But at the moment, of course, the one thing about Bitcoin is it is in the green in terms of it is rallying off that big breakout we saw just a week ago. So what are the other stories? Well, Intel's price was massive. This actually has only ever happened 2 times ever. So this is the second time. And it is a monster move in one day, up over 25% intraday. And of course, this is because of Nvidia's $5 billion investment. And yeah, it's a massive historic underscoring day for, of course, Intel. If you were in that, congrats for being, I guess, a long-term kind of bidder. But one of the things was it also did show a symmetrical triangle similar to what happened on gold recently, which kind of looks like this. I'll show you one just drawing it. Kind of looks like this if you look on the charts. And it just broke to the upside before this announcement. And that's why we often say price is the key. Closes, big understanding of coiled markets. When they do break out, sometimes there is news to follow, and that gives you a massive advantage. So remember, price action is super important. We've got plenty of that coming up soon. Smart money. Now, what is happening? Well, the capitulation index just hit levels we haven't seen since 2023. And you might think, well, what does that mean? Well, it basically means that pretty much everyone's freaking out, but at the same time, it usually happens when you get a market declining, not when you've got a market that's rallying at super points. So basically what's happening here is it hasn't done this since the Silicon Valley Bank crisis. So this is kind of telling us, could we be in another squeeze run? Well, we do have a couple of cycle things to talk about in a moment, but it may look that way, at least on the surface, because the market is liking what it sees in terms of a sugar rush. Now, remember, the economy and the stock market are very different things. Stephen Miran was the only dissenter in the recent dot plot, and he wanted a 50 basis point cut. But what he's looking for is quite a lot of cuts into 2025. And while the rest of the Fed is not there yet, remember, things shake up next year with a new Fed board chairman. So this is going to be a huge underlying factor of how the markets are going to play, especially over the next 6 months. Now, remember, it's the type of sectors as well that do well right now. You might think, oh, if the small caps come and they start to recover, then that's all good. Well, as we've seen before, that actually could be very bad post-rate cut over the long term. So over the next 6-12 months, it might be actually very bad if the small caps do better than the big caps in this market. Goldman Sachs has come out and claimed that they believe there are 2 more rate cuts for this year and 2 rate cuts for next year. But many people are now calling for 4 rate cuts for next year, which gives us a total of 6. So this basically means that it could be that we are seeing a Federal Reserve go completely against maybe increased inflation, and things could go into what we call a stagflationary economy. Traditionally, commodities, gold, silver, those types of things tend to do better in those, by the way. Now, let's take a look here at US heavy truck sales. This is a bit of a lead indicator sometimes to issues in the economy. Now, it's been declining for a while, so it isn't a lead indicator from the aspect of, oh, you go out and sell the market or anything, but it is actually declining and it's just about to make a new low. Now, this actually has happened many times before things such as the global financial crisis, or even before really, or at the top kind of the dot-com and even in the 80s. Now, could you say this time is different? Absolutely, but there are some other things that are starting to rear their ugly head. And this one here is from Jeffrey Fulvery, and I quite like it because basically what he's done is he's gone through, and you can get these charts yourself. Just go on over to, of course, the Fred website. And this is delinquency rates on consumer loans, all commercial banks. And what we'll notice is while we're not epically high like a recession would be, we're starting to get up there. We've just made a new high before, of course, where we had the pandemic. And we have also started to see this feed into bonds. So basically, delinquency rate on consumer loans, all commercial banks, when you look at the ICE BOFA US yield index option adjusted spread, what this does is it shows you a bit of a worrying sign. Often, this has been a precursor of a bigger underlying problem in the debt